All right, guys, good morning and happy hump day. We will kick off the morning call here for Wednesday, May 25th. And a quick look at the futures, guys. The S&Ps are down about 0.5%. The QQQ futures down about 0.5%, and the Russell 2000, everyone's favorite, the small caps, down about 0.5% as well. So as far as today's session goes, guys, I want to show you a few things to focus on to the upside. And then as far as the short side goes, pretty straightforward. When and if we get a close on the S&Ps under that May 12th support, so you're looking at 385, I think when and if we get a close under 385, we're going to see the market roll over again. So I do think that's going to trigger the next leg to the downside. And as far as getting positioned for that, guys, pretty straightforward. You want to focus on downtrends. So we're looking for stocks trading under the weekly 21. We're looking for stocks trading under the daily 21. We're looking for negatively stacked DMAs. But then we're trying to short those kinds of structures as close to the 21 EMA as possible. A good example that we took profits on yesterday is Wynn Resorts. Kind of take this through the checklist here. It's under the weekly 21 in a bearish weekly squeeze with negatively stacked DMAs. As far as the daily structure goes, you're under the daily 21. There's negatively stacked DMAs. So you want to short that nice and close to the 21. Then you get your flush like yesterday down towards -2. That is where you ring the register and secure those profits. So we did put a few shorts on yesterday. One in Wells Fargo under the weekly 21, under the daily 21, negatively stacked DMAs. Then we also put a short on the XLF, the financials. Negatively stacked DMAs. We got the sell signals, and we're shorting that pop yesterday. So the short side, my friends, is pretty straightforward. Find something in a downtrend. Make sure you're under your 21 EMAs and short those pops until it stops working. As far as the upside goes, we'll spend a little bit more time here. I think we all got a good grasp on energy. This is still the big man on campus as far as a good structure goes. So I do think, guys, buy the dip is going to be the game plan here on XLE until the structure starts to break down. If you look at XLE since, January, push this back a little bit, but I'm looking at energy since, January, the ugliest this has gotten was a very brief flush down to -2 ATR on the weekly chart. Like, that's it. That was the worst you saw here. So compare that to the S&Ps, compare that to pretty much any other sector. Energy is the top dog. Now, we are up here at 2 ATR on the weekly chart, so this isn't a fresh trend. That move really starts back there in December, January, off the weekly 21. So it's not really a fresh trend. However, do keep in mind, guys, we've got a 3-day squeeze here. 3-day squeeze setting up and a 2-day squeeze setting up. So keep in mind the rule of thumb. Once the squeeze fires, we're looking for 5 to 8, maybe 10 bars of momentum in that direction. So call it one more hoorah. But I do think energy is setting up for one more push. If you look at a monthly chart of energy, we are actually in the process of firing a monthly squeeze. This monthly squeeze basically triggered this year's trend. That really breaks out and fires back in December, and we've been riding that momentum ever since. So I think as far as a target here for the next few weeks, focus on that 90 level. That, I think, could be the push. So any dips here in XLE, any dips in names like Oxy, I think sets up really good here. Names like ExxonMobil, names like Chevron, they all look poised, guys, for more upside. Another good-looking group here is actually going to be the utilities, which just kind of made its way onto my watch list yesterday. As far as XLU goes, I won't call it the best daily chart in the market. It's kind of in the process of cleaning up. We are back above the daily 21. But what I want you guys to focus on here for the utilities is actually going to be the weekly chart. So let's compare this weekly chart to, say, the financials, or the semiconductors, or the industrials, or healthcare, pretty much everything else, right? Communications, XLC. transports. XLU here, aside from energy, one of the only sectors out there to hold weekly structure. So you did get the flush. You did get a couple of weeks of selling pressure, but your weekly chart holds up perfectly. You still have stacked DMAs. Histogram is still positive, and we never got a weekly close under that weekly 21. So as long as you can hold support above that level, this kind of strikes me as a good trend that got a little bit cooked, a little bit extended, due for a pullback. You got the pullback. Now as we find support right on top of that weekly 21, there's a brand new daily squeeze. So here's the scoop. I think if this closes back under the weekly 21, like everything else out there, it could certainly roll over. If they can hold that weekly 21, I do think that daily squeeze could trigger a pretty nice move here. In addition, there's a brand new 3-day squeeze. So let's check out a few of the utility stocks. One that we jumped into in the options room yesterday is XEL. And as far as the squeeze action goes, we got ourselves a little bit of a squeeze fest. Monthly squeeze is coiled up. The weekly squeeze is officially firing to the upside. The 3-day squeeze, looking pretty primo. The 2-day squeeze, looking pretty good. And then you got the daily squeeze. On top of all that, you've also got a 4-hour squeeze here. So don't chase it. Don't get a shitty entry. The target here is going to be a push towards 77 to 78. So in the event you get a pull back to the daily 21, or even guys, something like a pullback to the hourly 21, could make for a pretty good entry. So we're looking for a little bit more of that. If it does pull back, another good candidate here is going to be SO. Right, similar structure, high compression daily squeeze. You've got the buy signals. I think you're looking for a push towards, same as XEL, 77 to 78. Then you've got AEP. Notice how they all look the same. So I could care less if it's the financials, the healthcare sector, industrials. If we're going to get long, we're looking for this kind of picture. We want that good trend. We want that good structure where the stock is trading above basically every 21 EMA, weekly chart down to a 5-minute. Then you're looking for that push. So whether it be AEP, whether it be SO, whether it be XEL, utilities are shaping up pretty good, guys. So you've got energy, you've got a few utilities, and then I think you want to buy the next dip here on UNG. This one's been a beast, and with the big 3 buy signals here, this has been pretty fun. Even if you're a day trader, you can kind of sit back and wait for these 15-minute squeezes. 15-minute squeeze with the buy signals is just as good as a daily squeeze of the buy signals as far as getting a nice push towards 2-8AR. But you go into that 15-minute squeeze at the end of yesterday's session, right underneath the highs, and we're going to gap up here today to about 31.30. 31.30 takes it well past 2-8AR. So it's getting a little bit extended in the short term, but I do think you got some momentum here. So pullbacks to the 30-minute 21 EMA, pullbacks to the hourly 21. Think any kind of pullback here should make for a pretty good entry, guys. But those end of day 15-minute squeezes, they can shape up pretty good. So I don't think you want to chase this at the open, but I think a good example of is a general statement what we're looking for if we're trying to get bullish. Whether we're trying to play the 15-minute chart for a day trade or a really quick trade, maybe we're going to focus on a 2-hour chart. That could be a trade that lasts for a day to a couple of days, whether it's a weekly chart. We want to make sure from top to bottom, every time frame is lined up with good trend, good structure, and bullish momentum. So a lot of the best movers in the market, they're going to have these buy signals here across all time frames. So if you look at UNG, very much like that pushback there, we've got the daily buy signals, which we pretty much haven't lost since March. Get the 4-hour buy signals. So from top to bottom, these are the kinds of things that point towards more upside. Our only job is to make sure we're getting some decent entries. But there, my friends, is the bullish watch list. Energy is the big man on campus, albeit technically extended on the weekly charts perspective. But here's how I look at it. One, you never want to fight the squeeze. So, okay, it's one thing to not get long at plus 2 ATR on the weekly chart. It's another thing to think about getting short. I would not think about getting short energy. You don't want to fight that squeeze. So maybe back here you thought energy was a little bit extended, but if the 3-day squeeze fires, there's 5 to 8 plus bars of momentum. So I do think the 3-day squeeze, along with the 2-day and along with the daily, pretty good trio of squeezes here. I think it's good for one more push, looking for a move into about 90. So you got some of that, you got some natural gas, and you got a few picks on the utility side here today, guys. So add those to your watch list. And then as far as the overall market, you've got your May 12th low. If you're looking at the S&P futures, that's going to be 38.50. If you're looking at the SPY, that's going to be about 385. Hold above that level. With everyone and their mom getting short here, there could be the potential of a short squeeze. But here's been the name of the game recently. They'll push the market to the point where we're deeply oversold. They'll trap the shorts. Then they'll kind of restructure the 15-minute, 30-minute hourly chart just enough to lead us to believe here comes the short squeeze. It's like, all right, everyone got short. Market's starting to rip. We're back above the 15-minute, 30-minute, hourly 21. The stage is set, so to say, for the short squeeze. But what they've been doing, guys, is basically setting that stage right near the highs and then gapping the market down the next day. So one level to anchor to could be your hourly 200 SMA, which is the blue moving average right here. I'm not going to claim to focus on the hourly 200 that often, but as far as some visual context, this has been the name of the game since like April. Flush the market, get things deeply oversold, trap the shorts. Then for a couple of days, they kind of paint the picture here that we're setting up for the short squeeze. So in the process of setting up the potential short squeeze, you got folks getting long, you got people buying calls. They set the stage, and then look what happens on the first back test of the hourly 200. We slice through it like it's not even there. And then the process kind of continues. We get deeply oversold, trap the shorts, paint the picture that we're restructuring things. First back test of the hourly 200 totally fails. And you had the same thing again. And yesterday, a little bit of the same. And then even this morning. So again, what's interesting is that all kind of takes place near your daily highs. Right, so if you look back here, we flush. The stage looks like it's set. We're testing those highs. Then it fails miserably. So we trap them, rip it right back towards the highs. Looks like we're going to squeeze the shorts. The next day it fails miserably. We get oversold. We trap the shorts. Looks like we're going to squeeze them out. The stage gets set. The next day it fails miserably. That has kind of been the theme here. So food for thought, my good people. But if y'all got any questions, you got any charts you want to take a look at, we got about 5 or 10 minutes here, and then I got to jump into the gold room and take those good folks through the open. As far as group trades in the gold room, or the options room, I should say, we are long Oxy and we are short XLF. And then in the mastery, we are short Wells Fargo and TXN. And we took profits on the win short yesterday. That's what I got for y'all this morning. Let's do a little bit of Q&A here. Then we will roll into the open. Let me see what we got here in the chat. AAA, good morning. Morning, Jared. Good morning, Jordan. I'm here for it, Jordan. As long as as long as the energy and the utilities can keep trending higher, personally, I would love to see everything else get nasty here. We'll see. Yeah, Jace, good work. I mean, earnings has not been forgiving. Not been forgiving at all. You've been playing BJ's, Dollar Tree. Yeah, like Target's a perfect example. And I think, guys, we're starting to see like the domino effect. So it was like retailers and these consumer stocks, they're getting hammered on earnings. It kind of has an impact across the board. You kind of get some of these stocks getting caught up guilty by association, so to say. So Target gets creamed, Walmart gets creamed, and as a result, you got names like Coca-Cola kind of minding their own business, but then they get caught up in the crossfire. You got names like Snapchat. They didn't even announce earnings. Right? The CEO just comes out and issues a warning, so they're down 40% yesterday. That's pretty nutty stuff, guys. Right now, it's not Amazon, it's not Google. It's quote unquote only Snapchat. But to be in a market where a company can lose, let's call it half of its market cap in one afternoon, not a market to take lightly. And then you get, Facebook down 8% yesterday at one point because of that Snapchat news. Google down like 9% at the low of the day. So earnings hasn't been forgiving for the stocks announcing the earnings. Also hasn't been too forgiving on, anybody getting caught up, anybody in the same sector. Yeah, Jordan, I do like Adobe for a short. Yeah, it's still structured pretty well. I mean, I think the easiest way to look at the short side is if it doesn't have like perfect bullish trend, perfect bullish structure, and a whole bunch of bullish momentum, then it's probably going to roll over with the market. So something like an XLE, something like a UNG, that's kind of got the structure to potentially buck the trend. But then something like an Adobe, you're under the 21s. There's negatively stacked DMAs. Market rolls over and takes out the lows. And it's called a 95% chance Adobe's going to roll over with it. So I do like that for a short. I do indeed. Hey, good morning, Sour. Thoughts on Caterpillar? Let's check out the big cat here. So just going based on my rules here, I can't get long for a swing trade if we're under the weekly 21 EMA. So for now, we're under the weekly 21. That also lines up perfectly with the daily 21. And you've got your daily 200. So I think for Caterpillar in the short term, one of two things is probably likely. One, probably the more likely outcome, is that Caterpillar is going to move wherever the market goes. So if the S&P squeezes the shorts for 2 weeks and we rally 4, 5, 6%, you're probably going to get a pretty mean pop to the upside in Caterpillar. When and if the market rolls over, I think the big cat's going to go down with it. So keep in mind, they're going to move with the S&Ps, but as far as the structure of Caterpillar, for me, I would have to lean short so long as we're under 210. No stacked DMAs, no buy signals, no bullish momentum, and you're underneath your 21. So as far as playing the probabilities game, you take that structure or lack of structure, probabilities point towards a move to the downside. Getting back above 210 doesn't suddenly make this the most bullish thing in the market, but to some extent, it does rebuild a little bit of the structure to the point where Caterpillar might hold up all right. So I think if you're thinking short, you anchor to that weekly 21 around 210. Below it, could see lower prices. Back above it, it could fight that good fight. Hey, good morning, Janice. Thoughts on CCJ? All right, CCJ. Let's check it out. It's an interesting spot, Janice, because there's one part of me that says, okay, we're under the daily 21. with no stacked DMAs, that's typically for me going to be a short. However, guys, if you look at the stacked DMAs label here, you'll notice the weekly chart still has positively stacked DMAs. In plain English, even though this took a pretty good tumble, the weekly chart never really flipped bearish as far as the structure goes. Now we are under the weekly 21. If we're going to pursue continuation to the upside, it's a pretty important level to get back above. So Janice, I would say here for CCJ, your key level of support is going to be that daily 200. I think trading and closing back under the daily 200 just kind of opens the door here for this thing to start ebbing and flowing to the downside. We'll get the big flush. We'll pop back towards that daily 21. We'll roll over and then kind of repeat that process. So I think you want to look for that daily 200 to hold, and then back above that daily 21 is where this starts to rebuild the structure that could take it back into higher prices. So kind of playing the over-under game here. I think you could be bullish above 2350 and a little bit cautious beneath 2350. So I hope you found that helpful. Jared, should we stay away from healthcare? So good question, Jared. If you look at XLV, just the group itself, not the cleanest. So definitely not on par with energy, natural gas, utilities. And frankly, if XLV closes back under the daily 21, for me, would kind of set up the short. So we have the context that the group isn't, crazy bullish. And then as far as a Pfizer goes, good call out here, Jared, because this is an interesting group. I don't like XLV. Not enough edge here. But if you look at like Eli Lilly, that's kind of borderline perfect. I think Pfizer, that probably sets up for a nice dip, a good buy the dip entry. And then if we look at Moderna, so this is where it's mixed. XLV to me is a little bit closer to a short than a long. Moderna for me could only be a short under the daily 21 with negatively stacked DMAs. But then you've got things like Eli Lilly and Pfizer honestly shaping up pretty good for longs. So I think in this kind of scenario, we just want to follow the good structure, but it really comes down to a position sizing thing. So for the sake of conversation, Jared, say you wanted to buy the dip on Pfizer. I think we can point to a few different things here that make that a good idea, but I don't think you want to attack that with your max position size. Getting long Pfizer, the overall market is not providing any wind at your back. And then at the moment, XLV itself, kind of tough to say that's providing a bunch of wind at your back. So you can look to get long Pfizer. You could look to get long Eli Lilly. But I think you're doing that with a little bit less position size than say, hey, here's energy looking perfect, and now I'm going to buy Oxy. I think we trade those kinds of situations a little bit bigger. But good call out there, Jared. It's an interesting group. Sebastian. Always good seeing Sebastian. For now, the semis would be a short, Sebastian. Every little brief trip back towards that daily 21, that's the first opportunity it gets to try to rebuild structure. Fails miserably. Once, twice, and 3 times. So take that daily structure, negatively stacked DMAs, and you're well under your weekly 21 in a weekly squeeze. All of that suggests the path of least resistance continues to be to the downside. Where if we flip it upside down, guys, and look at the inverse chart, I would look to buy the next dip here, playing that to the upside. So I still think the semis are setting up for a short. And that kind of comes down to the market. Not even so much a semiconductor thing. Ooh, Brad, how about the Mavericks? Not to go on a tangent here, but the NBA playoffs are something else. Like, Warriors will win by 20 one night. Then you get a game like last night. Same thing with the Celtics and the Miami Heat. A little bit crazy. Nick, you want to look at Tesla? Yeah, we'll take a look at big Tesla. For Tesla, guys, I mean, this all kind of mirrors the S&Ps. In terms of, if we take our look here, starting with the monthly chart, there's a huge shift of trend and structure. We get a few days left here in May, but it is kind of shaping up to potentially be the first close under the monthly 21 since 2019. So that is a big shift of trend and structure. Throw into the mix, like the S&Ps, like Google, Apple, we're in a bearish weekly squeeze that still hasn't fired short. So from 1240 to 630, this has already basically gotten cut in half. But we have to respect that squeeze. Back here in a bullish squeeze, you'd want to be really careful shorting Tesla. You want to be really careful assuming there's no way this can trade higher. Squeeze fires, you're going to get 5 to 8 plus weeks. So as a monthly chart starts to break structure and a bearish weekly squeeze is coiled up, that all points towards path of least resistance being lower. Still, we don't want to short it down here, minus 2 ATR necessarily. So guys, for now, I think the easiest trade on Tesla is you get that afternoon where the market is squeezing the shorts, everything's up 2, 3, 4%. You get those brief pops. If the pop doesn't change anything about the structure, if we're not back above the 21, if we're not shifting the histogram, those are your shorting opportunities. And like the semiconductors, like everything else out there, it's not so much a Tesla thing, just kind of an overall market thing. And then Jordan, last one here before I jump into the options room, Starbucks. Would love to short Starbucks here and make some of the cash back. My fiance is a Starbucks chick. This has got short me written all over it. Negatively stacked DMAs across the weekly and the daily. Bearish daily squeeze. Getting stuffed at the daily 21. Now, Starbucks is not special. So if the S&P 500 rips the head off the shorts and we rally to 410, Starbucks is probably going to pop aggressively. But Starbucks does not have bullish trend. It does not have any kind of momentum. This does not have the structure to go against the grain of the overall market, meaning when the S&Ps roll over, take out that low, and make their next leg to the downside, we would still look for energy to trade higher. We would still look for UNG to trade higher, but we would definitely look for something like Starbucks to trade lower with the market. I like that for a short. And then Willie G says he dislikes the Warriors. We will leave off on that note. Best of luck today, guys. For those of you in the options room, I'll see you in about 5 minutes. If you guys aren't already in the free trading room, make sure you head to simplertrading.com, sign up for the free room. I'll be in there this afternoon. And you got Danielle in there, Henry. I think you actually got JC in there this Friday. So definitely check that out, y'all. But as always, I appreciate your time. Hope you found a little bit of the analysis helpful. And Chandler will be with y'all on Friday for a little bit of more pre-market prep.